Paytm Bank's crisis continues, with an industry body asking merchants to look beyond the digital banking giant for online transactions. And this comes after the Reserve Bank of India ordered a halt to most operations of Paytm's banking arm. While some industry bigwigs have criticized RBI's move, the Confederation of All India Traders have advised merchants to consider other payment applications. For Paytm, finding new partners for banking services to replace the restricted ones is crucial. Rebuilding compliance requires a complete overhaul of internal processes, which is a daunting task. Most importantly, millions of users who have lost access to Paytm's services need reassurance. Millions who rely on it for daily transactions, from candy purchases to groceries, wonder that if Paytm will survive. While Paytm's future hinges on their trust, experts suggest the need to restore credibility. The market reaction has been swift and harsh. Paytm's valuation has crashed to $3.7 billion, losing 75% of its stock value. And that is a staggering $2 billion loss in just over 2 days. Still, the CEO of the company of Paytm, Vijay Shekhar Sharma, is undeterred, describing it as a speed bump, even as concerns over the regulatory roadblock persists. Demonetization in 2016 propelled Paytm to national prominence. Millions embraced cashless transactions, and Sharma became a poster boy for India's startup boom. Investors like Alibaba and SoftBank showered him with billions, and Paytm's 2021 IPO promised global ambitions. But since the IPO, that dream has turned sour, with the value crashing significantly and eroding investor confidence. Now, regulatory action threatens to cripple Paytm further. And for more on this, we're now being joined by Vikas Singh, author and columnist, live from Hyderabad. Welcome to the broadcast, sir.
Good morning. Thank you so much for having me here.
Right. So, Mr. Singh, my first question to you is that how do you see this play out for Paytm?
I don't think it looks rosy for Paytm, and I think Paytm has not only one bump, as Mr. Sharma says, but several bumps to build its credibility and to build the trust that it had over the last 3, 4, 5 years. It's not going to be rosy. It's going to be difficult. It's going to be something that they need to factor in going forward.
Right.
Not only will the shareholders also lose, but the whole credibility of Paytm is a question, because we've heard that reports came in that RBI had warned them a couple of years ago. And if an organization of the size of Paytm is not able to correct something that the regulator had talked about, it shows some credibility issues there.
Right, Mr. Singh, you speak of how this is not the only speed bump, like the CEO has put it across, that Paytm faces, but it also has a slew of issues. Talk to us about as to what does RBI's action on Paytm mean for the fintech industry?
I think it'd be wrong to paint every organization in the same brush as Paytm, though it is quite evident that there is something nasty going on in the fintech industry. I think there are smaller entities which are not as regulated as the larger ones, and the regulatory body must ensure that we don't have another example of Paytm in the nearby. Because the industry and the economy can take one bad news, but it can't take a series of other news. So regulator must be more stringent. They must be more vigilant and ensure that this example is not repeated. Having said that, I think the health of the fintech industry is safe. Our viewers also must understand that, contrary to popular belief, the fintech industry is not such a large piece of the entire financial sector. So it's an industry which is coming up. We must give them time, but they must be well regulated. So,
right.
So that's something that people must recognize and realize.
Right. Mr. Singh, also talk to us about how millions of users who have lost access to Paytm services, they now need reassurance, and especially millions who rely on Paytms for daily transactions.
I don't think that's such a big issue because the RBI has made it very, very clear that those people who had put in money in the Paytm or they will not be affected. Their money is safe. So they are not the victims of that. Those users who've been using Paytm and have been sparing by Paytm, they are going to be impacted. But RBI has given them enough time to switch on to other UPIs. So Paytm is not the only game in town. That's not a big issue. I think the bigger victim is the shareholders of Paytm, those people who invested, the hordes of retail investors who put in money 3 years ago into the shares, believing the management, believing the future of this company. They are the ones who are affected. I would also like to make this probably may not be the right forum to talk about this, but I think SEBI has a huge role to play as well. SEBI must ensure that retail investors, the small investors who put in less than 1 lakh, 2 lakh rupees into this game are the ones who are facing the brunt. The market price of Paytm has already gone down by about 45% in the last 3 days. And what do we do with those small investors? What needs to be done about that? One suggestion could be that the SEBI should make sure that the circuit filters are not applicable to the small shareholders, so that they find it easier to get out in these kind of circumstances. But my heart goes out to millions of shareholders who are losing money. Having said that, we must also recognize that the large shareholders, somebody like Hathway, Berkshire, more famously known as Mr. Buffett's company, they moved out of Paytm about 4 or 5 months back. The other large shareholders have also got out. This should have been a signal to the smaller shareholders to move away, but it's probably too late.
Right.
But there is something that needs to be done on this front as well.
Right, Mr. Singh. Thanks very much for taking our time and joining us here on WION. Always a pleasure to have you here.
My pleasure. Thank you so much.